SoFi has been quietly setting up for what could be its biggest breakout in years. The stock has already proven resilience in 2025, with surging membership numbers, strong second quarter earnings, and bold moves into crypto and technology platforms. But here's the catch: Wall Street is split. Some analysts see massive upside, while institutional investors are still hesitant. Add in the pressure of rising Treasury yields, and you've got a perfect storm brewing. The question now is simple: is this the last cheap entry before SoFi rockets higher? Subscribe now so you don't miss what comes next, because the window could be closing fast. The divide in sentiment is striking. Bullish analysts are highlighting SoFi's rapid membership growth, diversification, and improving fundamentals. They point out that SoFi isn't just a fintech bank anymore. It's evolving into a full-spectrum financial ecosystem with lending, investing, banking, and crypto all under one roof. But institutions aren't all convinced. Some funds have been trimming positions wary of SoFi's still elevated valuation compared to traditional banks. Others cite the broader risk-off environment in financial stocks. This split means the stock trades with higher volatility, but it also creates opportunity. When institutions flip back to net buyers, the upside could be sharp and fast. Here's where things get interesting. On a forward PEG ratio basis, SoFi trades around 0.62 times, a level that screams undervaluation if its growth continues on the current trajectory. To put it simply, the market is pricing in risk but not fully recognizing the upside of SoFi's earnings expansion. What this tells us is that if growth holds, SoFi is not just undervalued, it's potentially one of the most mispriced growth stories in fintech right now. Of course, that if is massive, and that's why every quarter of execution matters so much. SoFi's second quarter earnings were a turning point. The company beat forecasts, showing strength across multiple verticals. Membership momentum continues to impress, with millions of new users flowing into the platform. The more members, the more cross-selling opportunities SoFi has across banking, credit, and investing products. Then there's diversification. SoFi is leaning back into crypto, exploring new blockchain services, staking, and lending products. This positions them not just as a consumer bank, but as a future-forward digital finance hub. Combined with its tech platform expansion, which provides banking infrastructure for other financial players, SoFi is embedding itself deeper into the backbone of modern finance. This dual approach, consumer plus infrastructure, is what makes SoFi more resilient than other fintechs. It's not just chasing customer deposits, it's building recurring, scalable revenue streams. Now, here's the reality check. Rising Treasury yields continue to weigh on growth stocks, especially fintechs like SoFi. Higher yields make traditional banks and bonds more attractive, which puts pressure on valuation for companies like SoFi that are still trading at a growth premium. This macro environment is the biggest reason SoFi hasn't broken out yet. Every time momentum builds, yields tick higher, and traders pull back. But here's the flip side. If yields stabilize or even decline, SoFi could be one of the first to rip higher because its fundamentals are already improving. This is why so many eyes are locked on SoFi right now. You've got a company firing on all cylinders, undervalued by traditional metrics but capped short-term by macro pressure. That tension is exactly what creates explosive setups. Once the lid comes off, the stock can move faster than most expect. Before we continue, if you've been following this channel, you know I don't waste your time with hype or guesswork. I focus on research, real insights, and tools that can actually help investors. That's why I've partnered with The Motley Fool, one of the most trusted names in the investing world for over 20 years. You'll find my link in the description. It's the easiest way to check them out and see what they offer. That link also gives you access to special deals or discounts they have available right now. And yes, it helps support the channel too. Now let's get back to the video. SoFi is sitting at a pivotal moment. The bullish case rests on sustained growth, improving margins, and continued membership expansion. The bearish case leans on macro pressure and institutional caution. Both sides have valid points, but the valuation metrics suggest that if growth continues, today's prices could look like a gift in hindsight. If you believe in the long-term story, this may indeed be the last cheap entry before SoFi stock reprices higher. but the short-term action will be dictated by yields and sentiment, so expect volatility. SoFi has the fundamentals, the growth drivers, and the undervaluation. What it needs now is a green light from the broader market. This is it for this video, guys. Thanks for watching, and please make sure to subscribe, like, and leave a comment down below.